and welcome to the Symphony Limited Q4FY24 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities. Thank you, and over to you, sir.
Yes, thanks, Darwin. On behalf of ICICI Securities, we welcome you all to Q4 FY24 results conference call of Symphony Limited. We have with us senior management represented by Mr. Achal Vakeri, Chairman and Managing Director, Mr. Nrupesh Shah, Managing Director, Corporate Affairs, and Mr. Amit Kumar, Group CEO and Executive Director. Now I hand over the call to the management for initial comments on the quarterly and annual performance. Then we will open the floor for question and answer session. Thanks, and over to you, sir.
Okay. Good afternoon, everybody, and a warm welcome to all of you to our quarterly and annual earnings call.
Standard. Post that, standalone PAT stands at 46 crore. Otherwise, it would have been about 54 crore. Year as a whole, standalone financials, top line is 796 crore, down by 10%. PAT of 153 crore, which is 19.2%, up by 60 bps. And our core capital employed in the business stands at about 44 crore, translating into ROC of 362% and RONW of 18%. And as on March 24, our treasury, that is surplus fund, stands at about 395 crore. So about EBITDA margin, YOY, almost remains the same, up from 20% to 20.2%. Coming to subsidiary-wise performance, Climate Technology Australia, top line 185 crore, reduced by 18%, EBITDA minus 23 crore versus negative 43 crore year before, and PAT negative 25 versus negative 43 crore year before. For IMCO Mexico, top line is 178 crore, up by 51%, EBITDA 27 crore, more than double, while PAT is about 11 crore, and there is a significant improvement in GP margin and EBITDA margin percentage. About GSK China, the top line is up by 36%, 44 crore, EBITDA is 5 crore, and also happy to inform that almost for last 2 years, GSK China is completely self-sufficient to meet with its financial needs, including working capital as well as its business growth. So for last 2 years, no more financial assistance or loan in any form is required by GSK. About Symphony Brazil, which is more like a trading subsidiary. So this was actually a first year of operation and registered 26 crore of top line and positive EBITDA of 3 crore. Coming to outlook, so starting March, it has been a decent summer. There has been all around phenomenal demand, and summer sets in early in southern India, eastern India and Maharashtra, and we are witnessing excellent demand across all these regions, across the models. and still 2 more months to go. And as further summer sets in, Central India and Northern India is likely to pick up further. So as you know, Symphony very well maintains its numero uno status in air cooler industry. And we are very confident about the long-term structural growth and performance in domestic as well as overseas market on account of intensified heat wave and climate change, which is already witnessing and will further witness strong tailwind in air coolers. And now, as we are witnessing improved performance in subsidiary companies, we are actually leveraging complementary strengths of our international business, which is our unique moat in many respects. Coming to climate technology in two parts. One is initiatives which have been already implemented or in the final phase of completion. There has been a substantial rationalization of overheads, that is cost of doing the business. When we acquired the company in INR, its annual overheads were 77 crore. In FY23-24, we reduced to 49 crore, and next year it is likely to be around 38 crore. There has been decent rationalization in gross profit margin percentage, especially in last 2 quarters. So as it can be seen, in Q4 of 24, gross profit margin percentage stood at 40% versus -7%, while in Q3 of FY24, it was positive 40% versus 28%. In first 2 quarters, as these measures were not implemented, actual effect is of last 2 quarters. This is mainly on account of calibrated price hike and revamped product portfolio and their sourcing mix. And further initiatives which are already in pipeline, and we believe that by September 25, further measures which will be executed. One is completely outsourced business model, which is progressing well, and by September 25, as far as portable air coolers are concerned, they will be outsourced from India, and the rest of their other products will be outsourced from China. So complete supply chain, OEM, products, etc. have been already set and decided. There is a complete revamping of the product category, for which we believe there is a decent traction, and they are also reasonably and decently profitable. And now we have also a decent distribution channel that should help us to really scale up. Thank you. So we are open for question answer.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2.
There is some disturbance.
Sir, before the question queue is getting formed, just Aniruddha here, just 2 questions from my side. So we had introduced one kitchen fan also, and we have also at least partially introduced the personal air cooler also. So any update on these 2 initiatives that we had done? So in terms of scale, or are these products pan-India, or how has been the performance of these 2 products? That is question number 1. Question number 2 is about air purifier. So now, since a larger public is aware about the air quality, pollution, all these details, so is there any potential to have air purification benefits in air coolers also? The way fan companies are now offering air purification benefits also. So just your views on that. And the third question, can you elaborate a bit more on the region-wise growth rates? I mean, let's say metro, tier 1 cities or rural markets, and in terms of the probably the market share that we would be having in these regions, and if there is any gain in the market share. Yeah, thank you.
I'll request Amit Kumar to answer these questions.
So, Anirudh, I'll pick these up in the sequence that you talked about. So, starting with our fans and the personal fans that you mentioned, these are niche products, and we are following a focused channel strategy for them. We have taken a conscious call of not spreading these across the entire country and in the entire channel that we have. So these are going into niche channels. As of now, we are focusing on a select set of cities in the double digits across the country. Most of these are metros and tier 1 cities. And for this year, the focus is on building the markets in these cities for these products. As we go forward, we would figure out how we expand the distribution across more regions and channels. The second point around the air purifiers, I do understand that's a category that has gotten consumer sort of understanding and in some markets at least acceptance. I do wish to highlight some of our models already come with the iPure, which is an air filtration technology that we introduced many years back into a select premium range of products that we have. That continues to be there, and those models we have made available across the country. So to that extent, a subset of our air coolers already offer air purification benefits, and consumers can use these products if they want both cooling and air purification as a combined benefit from the product. Regarding the regions and market shares, obviously we are collecting early information, but I think it's too premature at this point in time. This is broadly 1/3 into the season to talk about market shares for now. So allow us to hold on to this. Maybe end of the June quarter, we'll have a better sense of how we are doing on the market share for this season.
Okay, sure, sir. Very helpful. Thanks.
Thanks, Arun.
Thank you. The next question is from the line of Nesar Parikh from Native Capital. Please go ahead.
Hello, hi. Thanks for taking the question. My first
Sorry to interrupt, but the line is not very clear for you. I request you to please use the handset while you're speaking.
Hello, hi. Is this better?
Yes, much better, sir. Please go ahead.
Yeah. So my first question is, if we look at our A&P spend, right, for this quarter, it is almost halved. It was standalone and maybe even console. So are we, in a bid to save costs, are we under-investing in the channel? And how should we think about it, and how should we think about the A&P spend for the next year?
No, so it's more about year as a whole. As such, due to some strategic reasons, in March 23, it was disproportionate high. And secondly, considering current year, the way in which summer is shaping up, we decided to spend somewhat higher amount in June quarter. So ultimately, it is year as a whole. Of course, YOY also in 23-24, there is a decline in advertisement and sales promotion expenses. But just to remind you, in 22-23, there were some of the one-time advertisement and sales promotion expenses, more like test marketing, market research, somewhat related to D2C, e-commerce initiatives, etc. also. So what is in current year as a whole, it's more like a normalized advertisement and sales promotion expenses.
Okay. Second question is, can you give mix between how much, broad channel mix, how much is from home and how much is industrial, and also, within the home segment, how much is GT, MT, online? Just some rough directional idea.
So as far as central lines and ducted air coolers, overall on a console basis, it constitutes about 15 to 17% of the top line. We don't have company-wise data. And profitability-wise also, it is almost proportionate. What I mean to say, centralized air cooling is also equally profitable. What was your second question?
Sorry, GT, MT and online mix.
So this is too early because just 1 month of the current summer is over. However, YOY and in absolute quantity, it is showing phenomenal growth. But all put together in 23-24, it would have contributed almost 30% or 1/3 of the sale, which consists of large format stores, RCS, e-commerce, B2C, institution, etc.
Okay, so that 30-40% and the remaining would be GT, right? That's how we should think.
That's right.
Okay, fine. Got it. All right. Thank you so much. I'll come back in the queue.
Thank you. We have the next question from the line of Bala Subramanian from Arihant Capital. Please go ahead.
Good afternoon, sir. Thank you so much for taking my questions. Sir, my first question regarding the CT Australia. What's your thought process on changes in in-house business to outsourced business model? So what is going to change next over 2 to 3 years? And the second question, we are in the pipeline of launches of in heaters side. So what kind of opportunities we have on heaters and portable ACs?
So the Australian subsidiary was always a heater cum cooler company. So it isn't as if heaters are a new introduction. However, all this while it was focused on gas ducted heaters. The big change is that we are transitioning from gas to electric. So we are slowly reducing our reliance on the gas ducted heating business and introducing with the introduction of electric products, hoping to scale up the electric heating sort of category. So it's just a matter of changing from gas to electric. We were always in heaters. So amongst the new products, as far as heating is concerned, yes, we have panel heaters which can be on the wall. We have oil-filled column heaters which are like portable heaters. We have built-in electric fireplaces. So these are all, and we have strip heaters which are mounted on the ceiling for verandas and for outdoor areas. So these are new heating products that we have introduced. Amongst air conditioners, yes, we have introduced portable air conditioners. That range too is being fine-tuned and calibrated for the summer to come. And all of these products are going to be sourced from China. These products have been specially developed for us, given by as per our specifications by vendors in China, and the products which Climate Technologies used to make, till until so far, which is air coolers, roof-mounted air coolers, and gas ducted heaters, are also being outsourced to various manufacturers in China. Only portable air coolers, which Symphony specializes in, will go from India. All the other products will be outsourced to China. As a result of all this, we are on one hand significantly contracting our manufacturing capabilities and the space required in our overheads, as is evident in the numbers that we have shown of CODB reduction, but it also leads to significant reduction in our our cost of goods sold and an improvement in our gross margin, which is also evident in the numbers which have been shared with you. So this also allows us to completely focus on sales and distribution and not be, not sort of divert any of our bandwidth on manufacturing related matters. So this is something which we did 15 years ago. When we acquired our company in Mexico, it was also a fully vertically integrated manufacturing facility, and we transformed its entire business model into an asset-light, capital-light business model. So divested all the manufacturing, divested the real estate, outsourced everything, partly within Mexico or to China or to India. And so the focus solely remains on sales, and also the cost. You're able to reduce the cost of doing business, reduce the cost of goods sold, and most importantly, it becomes a variable cost business model. So in other words, that's what we had done in Mexico several years ago. We did it in China recently, and now we are in the process of doing in Australia as well. The way we call it, in India is we are trying to symphonize these companies. So sort of adopt a business model and a philosophy which is very much akin to what we have done at Symphony. So I hope I've answered your question.
Yes, sir. Sir, how much price hike done in Q4, and what kind of price hike we can expect in coming quarters? And because of the demand is very strong because of the summer seasons, if you could throw more light on the demand side and the price hike side.
There will not be. I suppose I assume you are referring to India.
Yes, sir.
Yeah. So there will not be a significant price hike in this quarter. There will be some minor price hikes, but a lot of it is already sort of, a lot of the prices have already been committed. So we will not be able to, sort of change the price significantly. There will be some minor price improvements. So don't expect much on that front. Yeah.
So is there 1 or 2% in that range, sir, or it's even more?
No, you can say in that range, yes.
Okay. Yes. Thank you, sir.
Thank you. The next question is from the line of Mayur Parkeria from Wealth Managers. Please go ahead.
Hello. Am I audible?
Yeah.
So, good afternoon, and thank you for taking my question. It's been coming back Symphony and trying to see over these years how it is done. So a couple of questions from my side, my regards to Mukesh also. In such a strong environment of summer season, even globally there is in most parts of the world and in India, is there a risk that we face a stock out situation?
Again, a good question. To some extent, that is sort of happening in some select models in our case. However, our operations team is working day and night to meet with the demand. But yes, it is an unprecedented situation, and not only us but pretty much the entire market, whether air coolers, air conditioners, are facing a similar situation. But like I said, our operations team is trying its best to be able to fulfill the demand, and so yeah.
Sir, we have always maintained a flexible manufacturing and rather capacity because it helps us to optimize our efforts on sales distribution as well as capacity change also, which we can monitor. So in situations like this, if I remember, such a strong summer, no early rains, and it has come after a couple of years, even before COVID. I remember it was 16, 17 times there were such, and we had broken a lot of financial records for us at time based on that capacity. In today's time, is it not possible to actually take away strong market share from peers who will have to expand, and we should situation even for and rather increase our market.
But your line seems to be breaking up in between, sir.
Hello, is it clear now?
It's slightly better, so please go ahead.
It's a good question, and that is what we are striving our best to do. So, like I said, our operations team is leaving no stone unturned to be able to meet the demand. So, who knows?
So can we gain market share in this times like this, sir?
We probably already have, although at this stage we are not bothered about tracking that we will see at the end of the summer. At this point, we are just sort of focused on fulfilling orders. But I'm sure that is going to be the outcome at the end of the summer.
Sir, just continuing with similar questions, when we had such strong summers in the past, I remember that our EBITDA margin were in the region of 28 in the domestic part. I'm saying in the domestic part, 28-30% also it has gone. Do you think in the next FY25, because our season is actually June quarter to June in that sense, so do we think that FY25 can be a year where we come back to our, I know it's not a situation, but for one of the years, is it possible that we hit that kind of back to our old margins given the strong tailwind we have?
First of all, I really appreciate your being so much on top of all the numbers, historical numbers. That's very remarkable. And I may also say that our margin at its best was EBITDA margin was 32%.
Okay.
So not only 28%, it was 32%.
Yeah, I stand corrected. Yes, sir. Yes. Sir.
No problem. But so what I'm saying is that our endeavor and our aspiration is to be back to that level. It might not happen this year, but in the next 2 years or 3 years or so, that is where we aspire to be back again.
Oh, acha. So, okay.
Remember, I said aspire, right? So
I
we will be
understand, sir.
certainly doing our best to do that. So don't hold me to that.
Sir, is it because compared to those historical years, means we still remain an outsourced model, our operations have not gone up? So is it just because that over these years, the pricing has, the inflationary on the cost side must have gone up, but our pricing may not have taken as proportionate increase over longer periods of time, and hence our margins will take time to come to those? Or is it something else at play? Because in a strong summer, we can state...
Nothing else. There is nothing else. What you said at the outset is exactly what the reason is. Costs went up during COVID, and because of sort of tepid summers, our pricing did not sort of keep up with the cost increases, which is why there has been a sort of a shrinkage in our gross and EBITDA margins. But with the trend of this summer, we will certainly be revising our pricing for going forward, and it will gradually inch back towards, or will try to inch back towards our historical margins.
Okay. So normally for our ordering, can I just continue with small questions to us, please?
I'm sorry?
Hello. Can I just continue for small questions, 2 more? Small? Yeah?
I think if you can join the queue, there are several other people waiting, so I think it will be...
I'll join, sir. Just one last question from my side. I'll join the queue after that. So last question. Thank you. Sir, our normally ordering takes place prior to our December season, right, from a dealer's perspective. It's just that the deliveries happen later on, but the ordering happens much before that. Are you seeing that the ordering pattern post-March has actually undergone a change? Is it that there is a similar, it's just that the estimation of demand was a similar kind and it's just the execution of the demand? We are seeing a structural change in the way now the ordering is also, even in this season, is still happening.
No, there is no structural change. This is, it's only that the demand is coming regions where modern retail or regional retail chains are strong and which do not buy in the off season. It is the GT which buys in the off season. So which is why what we are seeing this. Otherwise, there is no structural change.
Okay, sir. Thank you so much. I'll join the queue.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to 2 per participant. We have the next question from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thank you for the opportunity. First of all, it's just good to hear that you are enjoying the summer. It's quite a while now that we are actually going through a very smooth summer. So my question would be, if we look at probably North market still is not operating to its potential. So do we see any business loss? Probably we could have done significantly better probably in the upcoming quarter.
Manoj, before you go any further, your voice is not clear.
Is it better now, sir?
Sir, speaker, if you can use the handset, please.
Yeah. Is it better now?
Yeah.
So, sir, I was just regarding to the North markets, probably it's not operating at its potential. So, do we see any business loss? Probably we could have done significantly better volumes in the upcoming quarter. Or we are seeing so strong demand from the South market, probably we are just trying to meet the demand requirement over there. So just any thought on the overall demand environment? If you can.
North, it's a little, maybe the North will fire now. Now the summer generally sets in the North a little later. So it's not that North is not going to happen. It's certainly just a matter of time. And once North fires, then that will also just add to what we are already doing.
Right. And sir, so far the demand supply situation, probably we are able to meet it, right?
Yes, because again, the kind of products we sell in the North and the kind of products we sell in the South are somewhat different. So the manufacturing facilities are also different. So there will be no overlap or very marginal overlap, in that. And so there shouldn't really be any problem with that.
Right, sir. So, secondly, if you look at the gross margins, we did somewhere around 48% for the full year at standalone level. This is despite a profit sharing that we do with our subsidiary. Can we expect some improvement over there, or probably this should be normal case at least for next couple of years, for FY25 and 26?
I really don't know. Haven't thought that far, or we aren't really looking at that. But we, like I said in response to the previous question, we are aspiring to and working towards in the direction of restoring our historical EBITDA margins. So in the process, everything will go up, whether it is gross margin or profit after tax or profit before tax, whatever. So it's a matter of time, but that's the direction in which we would be heading.
Right. So,
more importantly, the parameter will be EBITDA margin, because once we take care of EBITDA margin, whether it is CODB or whether it is bill of material, everything is accounted for. And secondly, you would have also observed that in Q4/24, even though top line is up by 5%, our EBITDA margin percentage is up by more than 530 BPS.
Right.
Same is about console, not only for Q4 but year as a whole.
Right, sir. I was just coming to that, because if you look at, we did took some initiatives for improving on the cost side, especially on the subsidiaries, and probably the positive impact is visible during FY24. So, and in fact, you have already given some indication on FY25 as well. Just want to understand on revenue side for climate technologies, probably we have taken a lot of efforts over there, but revenues have declined significantly during the current year. So what is the roadmap ahead? Probably where do we see this revenues from 180 odd crores moving in next couple of years? So that would be helpful.
So our first endeavor would be to sort of recoup the lost revenue, what it was last year or the year before. So our first endeavor would be to be back at that level.
Right, sir. Sir, lastly, if you look at the receivable days, that has increased from roughly around 35 days to 53 days. We keep it very tight. So just wanted to understand any one-offs over there.
So again, that is because of the significant, so far the business that has come is more from regions where there is a domination of modern retail and regional chain stores where we do extend credit, and online also. So it's more a function of that, but it will certainly be reined in, in the days in a few weeks, couple of weeks.
And mind that billing starts from third week or fourth week of February until middle of May. So typically, it will be at its peak as on 31st March.
Right. Thanks a lot and wish you all the best, sir.
Thank you.
Thank you. The next question is from the line of Siddhant from Goodwill. Please go ahead.
Yeah, do you see the summer as an inflection point for the commercial cooling, or there's still there's some time away? Are you seeing inquiries around that, or how's that business going?
Again, it appears as if you are using a speaker, you're not using a handset. Would you mind using your handset because your voice is not clear?
Can you hear me better?
Yeah, it's better.
Yeah. So in the industrial cooling segment, are you seeing any rise in inquiries? Is that as an inflection point, or does that still seem to be far away?
Rise because of the current summer? Is that what you are saying?
Yeah.
Yes, of course. Because of the spike in heat, there is a much larger level of inquiries and orders also. So, of course, what we are seeing in domestic is also something we are witnessing in industrial coolers.
Okay. Apart from that, where's the channel inventory? Like you said, it's clearing out. So you expect, where was it like 6 to 8 months or 12 months ago, last season?
Yeah, of course, it was much higher than it is now. It is pretty much gone now.
It's pretty much gone now. So technically, even after the summer, an H1 could continue to do well, right?
That's right. That's what we expect.
And on going back to the 25 or 28% margin aspiration, what are the competition levels compared to 2016 versus 2024? Because I would assume the market has gotten a lot more competitive. So,
Not really. First of all, I again will correct you. It was not 25, 28. It is more like 32%. 32%. Competition, there's nothing. Nothing new about competition. We have been there, done that. They've been around. The faces change, the names change, the pecking order may change, but the number of players has been, as long as it has always been. So there is really nothing different about competition. Like I said, we just the players have changed. So we have faced competition, and all through our history. So really nothing significant has changed, and at the end of the day, it's just more people who copy Symphony's products. That's all.
Yeah, we've seen that. Okay, super. Thank you so much.
Reflected also in our market share.
Correct.
So, it remains intact.
Correct. Maybe that's perfect. Thank you.
Thank you.
Thank you. The next question is from the line of Ayush C. from Shravas Capital. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yeah, thank you for giving me the opportunity. I just wanted to understand, leaving all the countries aside, I just want to understand how the demand scenario is in India, and going forward, how you're going to cater to this demand.
Can you speak on can you use your handset, please?
Yeah, sure. Yeah, I just wanted to understand how is the demand scenario playing out in India, leaving all the other countries aside, and how are you going to cater to this demand going forward?
Demand scenario. I think we just spoke all this while we've been talking about that. The demand has been unprecedented because of the summer, and we are catering to it.
All right. Any new product launches in line?
Not really. We are. I mean, nothing exceptional for us. We are continuously introducing new products. We've been doing that, every year, and we will continue to do that going forward.
All right. Thank you.
Thank you.
Thank you. The next question is from the line of Lakshmi Narayanan KG from Tunga Investments. Please go ahead.
Thank you, sir. Two questions. One is on the standalone thing, our advertising has actually come down. We just wanted to understand, what is whether it will get, we are booking lower this quarter, the next quarter it will go up, or how to think about it?
We have already answered that a few minutes ago, but we will answer that again. Mukesh bhai, please.
Yeah. So, whatever advertisement and sales promotion expenses we have incurred in 23-24, that is normal. In 22-23, in fact, there were some of the one-time advertisement sales promotion expenses like related to D2C, e-commerce, some of the market research and market surveys, some of the overseas studies, etc., etc. So whatever we have incurred in 23-24, it is normalized, and that's what we had conveyed even in 22-23. And secondly, our overall or most of the market spend happens in March quarter and June quarter, and depending upon how season unfolds and depending upon the requirement, that is spread between these two quarters.
Got it. And what is the freight and forwarding charges in the standalone for the full year?
I think that we can answer you separately. We don't have the figure readily available.
Got it. Thank you.
Thank you. The next question is from the line of Rahul Gajare from Haitong Securities. Please go ahead.
Hi, thanks for the opportunity. Good evening, sir. Sir, I just have one question. Given most of my questions are answered, now it's a small thing, but the loan that we have given to the Chinese entity, and the impairment that we've done in this particular year. Could you tell me how much of the loan is still outstanding? Is there closer to 60 crore after this impairment that is outstanding?
So overall loan, including outstanding interest, was about 61 crore, out of which 7.80 impairment has been provided for. It doesn't mean it has been written off. It is provided for. So remaining is about 53 crore.
Okay. And you, how much time do you think you can actually recover this loan in? Because I'm just trying to think, will there be more impairments, and possible write-off sometime in future, given the performance of the entity that we have seen for the past couple of years?
So let me take you through Chinese acquisition. When we acquired the company, it was a bankrupt company, and on a top line of 50 crore, it was incurring the losses of 16 crore. So we acquired the company just for about 15 million rupees, and at that time the guidance given was in 3 to 5 years time we will break it even, and that's what we actually achieved in 3 years. Because the acquisition objective was, apart from various complementary strengths, really the sourcing strength, design and development, R&D, access to Chinese market, etc. However, post that is in 2018-19, post achieving the break-even, on account of COVID and due to a variety of other reasons, it completely disrupted. However, for last 2 years, again it is back on track, and the EBITDA, of course it is small vis-a-vis total, but this is the highest ever EBITDA what we have registered in current year. And we expect this to grow further and we don't expect in nutshell any write-off or impairment. We expect the cash flow and profitability to improve and hence the loan to return. Hopefully, even impairment also, we should be in a position to reverse.
Okay, fair enough. So that's the only thing that I had. Thank you very much, and best wishes for the very strong season that we are looking at in FY25.
Thank you.
Thank you. The next question is from the line of Aditya Bhartia from Investec. Please go ahead.
Hi, good evening, sir. So my first question is on inventory situation in the US, because we had spoken about there being destocking carried out in the last few quarters or rather a year or so. So are we starting to see demand improving, which can aid Climate's profitability and performance going forward?
No, couldn't understand your question. And if you can use the handset, please, Aditya. Aditya, can you please repeat the question by using the handset?
So my question is on the demand situation in the US. We are seeing massive destocking taking place over there because of muted demand conditions. Are we starting to see an improvement in performance in the US, which in turn can aid performance of Climatech as well?
Not at the moment. At the moment, whatever I said earlier, in case you heard it, with regards to Climate Technologies, is all limited to Australia. The US is something that we are not considering. Whatever happens in the US will be an upside.
Understood. So at this stage, we are not seeing any green shoots. If in case they play out, then that can provide a bit of an upside.
Correct.
Understood, sir. And on the domestic business, while I really appreciate the candid comments and the insights that you shared on margins, but I'm just wondering, if we are having a fairly strong demand scenario, then would the focus be more on market share or on margins? Is there a scope of improving market share a little more by maybe just keeping the margins where they are as opposed to looking for an expansion?
It will essentially be on the bottom line, So it is sort of a good combination of market share and margin. So we are not going to forsake volumes, but we'll maximize volumes and maximize margins.
Understood, sir. Understood. And one last bit. On the northern part of the country, sorry, I could not completely understand how exactly demand trends have been. Because has the summer properly set in, and have you started seeing very strong growth in north as well? Or so far it has been in other parts of the market?
North India is yet to fire, and we expect it to happen, anytime soon now.
Understood. But given that north is the bulk of air coolers market, what does it mean for the overall air cooler industry or our sales, let's say, in the month of April? If you could just kind of give some indications around that.
North is going to summer is going to set in. It's in all these years, it never has been that the summer hasn't, set in. Just a matter of time. So in fact, we are sort of in one sense glad that it did not happen so far, because otherwise we would have been burning the candle at both ends. We would have not been able to meet the demand for both the south and the north had it happened simultaneously. So in a way, it's good that the summer is staggered, so we are able to cater to the demand and not really have to forsake any demand, any sales.
Sure, sir. And north would be what proportion of our business?
I mean, again, those are numbers that we sort of don't disclose. But of course, it's the largest market in the country.
Right. That's really helpful, sir. Thank you so much for these insights.
Thank you, Aditya.
Thanks.
Thank you. For participants who have joined the question queue, we request you to please pick up your handset to ask your question after your name has been announced. We have the next question from the line of Shraddha Kapadia from Share India. Please go ahead.
Hello. Am I audible? Hello.
No, it doesn't seem. No, you're not audible. Please use your handset.
Shraddha, the
Hello.
line.
Is this better?
Yes, please go ahead.
Hello. Is this
better.
Yeah. Okay. Congratulations on the good set of numbers. Actually, I just had one question. Like, considering this year it's elections, so are we expecting any, increase in the revenues due to elections, or have we witnessed similar trends?
Election, to the best of my memory, has never had any major impact on our sales. So it is the summer, the severity of the summer is the only criteria that impacts sales.
No, so actually, if we have the rallies and everything and the public gatherings, so there we normally see the air coolers and everything. So that was the main point.
Sure. No, so sure. So they do use our coolers. You will find our air coolers on the stage also behind every political leader that is giving a speech. The coolers that you see would most likely be a Symphony. But sure, that happens. But that does not, lead to a huge surge in sales.
Okay. And just one more question. So in terms of adjacencies, is there any specific product which we have seen, performing very good, or some product which you would like to highlight?
No, so the only adjacency that we have got into are tower fans, which are also doing very well. But within air coolers, it is the segment of kitchen cooling fans that we elaborated, at the beginning of the session, that are also doing well, which have been introduced recently and are doing already quite well. So all in all, you've seen the numbers.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Shehzad from Evolve Media. Please go ahead.
Hello.
Yeah, go ahead.
Am I audible? Yeah, actually I don't have any questions. The question has already been answered regarding the ad spend. So thank you very much for giving me time. My queue has already been solved.
Thank you.
Thank you very much.
Thank you. The next question is from the line of Mayur Parkeria from Wealth Managers. Please go ahead.
Am I audible properly now?
Yes, sir, you're audible. Please go ahead.
So thank you for taking my question again. Sir, two questions from my side. Again, first I wanted to actually give a token of appreciation for the management. On the Australian subsidiary, it's been a very long journey for us from FY19 onwards, and the kind of pain we went through over these years. So if I remember correctly, again, 250-60 crores of the top line when we acquired that subsidiary. Over these 5 years, what would have been the accumulated loss, or rather cash loss, which would have happened over these years in Australian subsidiary?
Yeah, give us a minute.
Meanwhile, if you have another question until that figure is compiled.
Yeah. So now that sir, you were mentioning most synchronize all the international subsidiaries that happened in terms of asset light model, in terms of cost structures rationalization. So can we now safely say that the international subsidiaries will no longer be a drag on the domestic numbers, and not only drag but also any kind of support and any kind of pressure on the balance sheet P&L? And from here on, the focus is to grow next 2-3 years. And if that is if the interpretation is correct, can you help us with, because it's been a very long journey, can you help us with some targets or something which we can look forward to from the international subsidiaries? That's it.
So two things. First of all, it would be, we would not like to give a sort of a, what is it called? Forward-looking statement. However, we must also point out that the journey became longer because of COVID. Had COVID not happened, then the journey would have been over long ago. Because of COVID, we weren't able to go there for 3 years or 2 years. We could not even visit. They could not go to China. Chinese couldn't go there. Everything sort of came to a standstill. So were it not for that, things would have been very different. But we would like to, we would at the very minimal like to restore the top line that existed with given the new the latest cost margins and cost of doing business. Without that changing, with the same percentages growing the top line, that is going to be what we would endeavor to do the least. And to answer we have an accumulated loss of 86 crores in the Australian subsidiary.
And in continuation of your financial assistance related question, just to remind you, when we acquired from Mexico, initially for 5-6 years, we had to continuously pump in the financial assistance by way of loan, which not only recovered interest, but it is completely self-sufficient and debt-free. Similarly, GSK China, despite being China, almost for last 2 years, no more financial assistance is required. Hopefully, we are striving to achieve the same for climate technology.
Sir, what has been our export in FY24 from India?
Again, that's a number we will maybe pull up and separately you can talk.
Otherwise, in segment reporting, what we are already disclosing, it is there, but we don't have handy.
Okay, sir. Thank you. Thanks.
Thank you. The next question is from the line of Premalal Kota from IBM India.
कृपया लाइन पर बने रहें. The person.
The current participant seems to have left the line on hold. We will proceed to the closing comments, sir. I would now hand the conference over to the management for any closing comments.
Yeah. Thank you all the participants for your valuable insight as well as questions and sparing the time. Also, thanks to Anirudh and ICICI Securities for hosting this conference call. Looking forward to see and meet all of you in June quarter conference call.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.